Good evening. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up is for Monday, the 28th of November, 2022. And what an interesting day. You know, we walked in and the market was all nervous about one thing, China and the protests and what it's going to mean for the world slowdown if they crack down on them and so on and so forth. And then later in the morning, even worse stuff started happening. The Fed people started talking. Okay, so Bullard was out and with his usual hawkish point. Mester was out. Daly was out. Williams was out. I mean, there's just a whole slew of Fed talk. And there's one universal thing. And that theme is that we're going to continue raising interest rates until inflation goes back in the bottle. And while 75 basis points looks to be off the table, 50 points is there. And depending on how jobs data comes out, which is this coming Friday, and then we get some PCE and CPI numbers coming up, how those come out will determine, do we stay with 50s, go to 75s if the data's super hot, or drop down to 25s until we see the trajectory is locked in on inflation and jobs coming down. And with interest rates, where do they cross each other? And at that crossing point is where you get the point of inflection. What everybody's saying is what I have been saying here for a long time. That isn't anytime soon. The data will tell us where we're at, and we need to get the numbers like they're saying. They're already talking 200,000 jobs for Friday. Well, that's down from the 260s we were just at. Now, before I go too far, because we're going to got a lot of ground to cover today, I want to remind you, this is my Cyber Week. In other words, with the Cyber Monday, we go into, in my company, Cyber Week. And what that means is we have a sale. There won't be another one this year, so this is the sale you look for when it comes to my research. You purchase any one-year subscription to my research and get a choice of three things. The charting course, full charting course, $300 value. My enhanced Bollinger Band course, about a $90-some-odd value. And I am just about through with my outside day course. Should be done this week. One of the three. What do you get? You get the morning videos. If you go to my full research, you get my written commentary along with the morning video. And of course, for the SPDR traders, you can always go in for the morning SPDR video. So there's three different research products. You can buy them on a yearly basis. And as you do so, away you go. That's the values that you get. Want to give it away as a gift? You can. The subscription and or the courses. You tell us what you want to do. We can't make it any easier than that. We'll work with you. So how do you get to it? At any point during this, if you move your cursor up to the top, it will take you the right spot. This morning, we didn't have that working. It is now working, so that'll take you right there at any point. So let's go back now and talk about the day and the charts, and that's what we're here to do. Let's finish up with DraftKings, and I'll move on tomorrow to another chart. If you got something you want me to cover on Facebook tonight, write me. I'll see it first thing in the morning. I'll pick a chart from there, and away we go. I was looking for this market to fill a gap back here. It's done it. And now suddenly we're getting some different brokerage firms coming out with suddenly not even holds, but sells in this. I was looking at that today, a little surprising. Excuse me, I hit the wrong button there. When we take a look at what the pattern is, you've got lower highs, lower lows. That's bearish. Where'd the market fall back to? The line in the sand. What was the resistance point? As we went up, we fought a battle at the 100-day average, and you spiked one time up just shy of that 200-day average, and you also hit, what, the Bollinger Band? Oh, no, that was all the way back here. This has set the range. When you got to the upper band, and then within, 72 hours, you were at the lower band, and you've come back to roost right in the center. Any close under 1424 should be labeled as bearish, and then you might be in for another test of the 1145 area. You have to close over these two numbers in order to capture the shorts. In other words, close over 1570, which is the 200-day average, and then you can make an argument for 1704. The upper Bollinger Band. But right now, got to wait. You've got the trend down, the bias up. So where's momentum? Overbought. That's why the market's running into trouble. overbought market into key moving averages falling back. Lithium, you would think that this is going to do better, and it's not. It's been ugly as can be since it got up here, challenged, if you can see that, the 100-day average in green, and then the gray, the 200-day average. You stuck your neck out over it for 3 days, and then boom, you completely fell apart. What's interesting is I'm reading about Tesla's new super truck, these big trucks that compete with Peterbilts and the Freightliners and all, 80,000 pounds it can tow, 500-mile range. If there's ever a sweet spot, that's got to be it. It's supposed to be deliveries this week. They just did the test last week. We'll see what this means for lithium. It should be interesting. In Apple, I'm sure you read about the problems that Apple's having. 6 million phones less production this year than they were counting on. And of course, the phone's right at the heart of the Christmas season shopping. You've already gone through Black Friday, Cyber Monday, and you can't get the phones right now. So the market down today, nearly 4%, back into a bear trend. This was a rally that I didn't think was going to hold. I said that to you the whole time I've been covering it because I've been reading about that, and I only think the situation's going to get worse in the near term. Now, Disney, Bob Iger held a meeting today, like a town hall meeting with key members of Disney. And apparently, it's all going to go back to profitability. The company has to turn around its fortunes. Under the last CEO, they didn't do that. They were expanding, spending money. Now he wants to come back to the profitability issue. Okay. In order to do that, you better stay, though, over. And I use the word stay over, and I'll take you right to this number because you could have a problem if you get under it. This is 94.68. If you get back under that number, you could have a real ugly chart develop here. And it could be saying you're going to come back and challenge the lows when he came in to take over, when they threw out Mr. Chapek, was it? In XLF, you have an embedded reading. So this is still good. The financial services are looking fine. They can give up some ground. They can lose the embedded reading like that tomorrow. Why? Even though you got an 83 reading, you had a big range day, down nearly 1.75%, nearly, and you closed at the day's lows. If you open steady to lower, you're probably going to push the 80 level, if not lower. If you lose the embedded reading, you got to be out of Dodge because you're going to be coming back probably to that 18-day average of closes. But you have to see the open to know what to do. In XLI, you've got the same thing. You're about to lose the bullish embedded reading. You got an 81 reading. Again, a market down today, 1.8%, and a nice range. Now, it's going to lose the embedded reading unless it just gaps higher in the morning, and that's what it would have to do. Otherwise, you lose it then. Will it stay lost in both of these that I've just covered by the end of the day? I couldn't begin to tell you that. I can tell you they're going to lose the reading, and if they stay lost, then I expect prices to go back to the 18-day average of closes. XSD, notice how the market just got overbought, turning back down, coming back to the support zone of the 200-day average and the 18 and even the 100. It's not trending. You have a higher high and low pattern. And since it got up and over the 200-day average in the Bollinger Band and went right back and has been fighting a battle to try to stay over it. Will it be able to stay with it? I doubt it. I think you've spent a lot of energy getting up to this level from here. Now you got to come back and consolidate a lot of it. That's the kind of chart I'm expecting to see. In the home builders, overbought. You spent your power getting to the 200-day average and the upper Bollinger Band. Told you, I still don't understand why this market rallied that much. I understand mortgages are falling. I understand they'll probably slip back, could even get back to 6% in the 30-year fixed at any point in time. Not going to surprise me because the curve yield's doing this. You're picking up the very, very short end and you're dropping the 10 in the 30-year. I get it. But is that going to be enough to really get the home building going? Don't know. We're at that funny part of the year where I don't worry too much about sales. how much sales do you get at Christmas? Who goes out and buys homes at Christmas time? You do that after the first of the year. Certainly the spring months will get very interesting. And what about housing starts for the builders and so on? I only think they're going to build what they have money on the table for. I don't think there'll be spec homes being built in this type of market. On the energy sector, everything looking still weak. Now, we don't know what's going to happen with the European Union. There's a lot of infighting. The European Commission, which is the head of the EU, made proposals today that got the oil cap down from $65 to $62, and it was not accepted. Some countries, I think it's Estonia, Lithuania, Poland, they all want much lower prices because they're saying it only costs $20 to produce the oil in Russia. Why are you giving them so much profit that they can have? The shippers like Greece and other members say, no. We need a higher price here so that there's a commerce in that. So the battles are going on. You see it. They have to make a decision before December 5th. Otherwise, they don't need a cap. Everything gets completely crazy very, very quickly. That's the date that's been agreed to. So you're going to hear this fighting all the way through. Today's the 28th. You have 7 days from today. I predict at the very last minute they'll figure out the caps. All right, I'd like to see it ahead of that, but it's coming. In GLD, momentum, you lost the embedded reading. You often make a run when that happens to the closest moving average under the market. So I'm looking for 160.95. In the silver market, you had lost the embedded reading back here. Exactly right there. It took time, but now you're back to the 18-day average of closes. Copper, you lost the embedded reading right here. You didn't go up and take out these highs. So the odds still favor you're going back to 33.25 before you make a new high in the market. Plus the 200-day average here, awful lot of resistance. I teach that first time you make a run at a 200-day average, got to be careful on that chart. I mean, it's a one-year average for all purposes. It's a big resistance point. Then we get to TLT, we get to the other parts. Well, anything from 20 years on, the market is saying, listen, we probably have a recessionary environment in 2023 or stagflation. Market is saying it's going to be one of the two. It's not going to be expansion. Does that mean the marketplace is right? You never know. I mean, think of what everybody says in the month of January, and they're rarely right? Okay, so same thing with this. Trying to predict a year ahead of time what you're going to have. I love the exercise. Would I bet on it? Not one way or the other. Things change. The market is dynamic, and you pay attention to that. But this market is saying that all of these outcomes don't put pressure to keep raising rates on the longer term side of the market. I think I agree with that. One thing can throw it off. What is it? You know? Jobs stay super strong. Super strong jobs, not falling back, throws all these plans out the window because then the consumer's got plenty of cash to keep buying and buying, even with prices going up. Example, you had your Black Friday sales. I don't know how Cyber Monday's going, but it'll probably be big. But you have to build into last year's price inflation. So let's assume we're dealing with 7% headline inflation, right? At least that number. You're not beating that from last year. So the consumer is beat the dollars of last year for less goods because the price of the goods have gone up. Interesting thought process. Supply chains, to me, I'm not hearing that there aren't supplies of literally everything you want to buy out there. So that should be an interesting time. I know of one item that I couldn't find. My wife's dying for a certain purse. What wife doesn't want a certain purse and shoes? Every store I'm going to for this one type of purse, can't find it, all right? And we have friends that work as directors of some of these divisions of these stores, and it's sold out. I'm on lists. We'll see if I get it. Otherwise, you're getting a picture of it. Okay, so UUP, lower low, higher high, but embedded. Okay, so is this rally going to hold? Well, if you stay embedded and don't lose it, this rally in the dollar index should not hold. It should have a big problem right away. And in FXE, I think today was the day that you had to take money off the table. If you look at some of the other key averages in this market, prices were hit up there, the 200-day average, and the market settled right back off of that. But let me explain. As the dollar still has its bearish reading, this until it loses that red line under 79, this could be a correction that still carries the market higher. What would set that off? Maybe the cap price that Europe agrees to. Miss Lagarde, maybe she'll make a statement about, hey, the economy can only handle so much in the way of interest rates. There's an awful lot that can happen. Pay attention to that, understand it, and remember, you've got the sale going on. You can click right up here to get the product. You're not going to get another opportunity this year like this. And how do you do it? Well, you just take a look. If you got my video, you work with that. Otherwise, you, as you're watching on TV here, just click the link in this video and away you go. I've sent everybody that's on my mailing list, by the way, an email with the sale. A lot of people taking advantage. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow. Take care now.